And good afternoon. Welcome into Market Talk for Monday, April 5th, 2021. Hopefully, you had a blessed Easter holiday. We thank you for joining us here once again. MarketTalkAg.com, our home on the web. And a good afternoon once again. I'm your host, Jesse Allen. Find us on our website. All of our streaming sources are there, our radio affiliates, our social media links. It is all available. MarketTalkAg.com. Well, as we come back from a long holiday weekend in the trade, we get in here today and mostly a favorable risk on day, it seems, in the grain and ag sectors as a whole. Let's talk about it. Let's bring in our good friend Bryan Doherty with Total Farm Marketing joining us here. Bryan, good afternoon to you, sir, and a positive start to our trading week, it seems, with some good numbers on the board.
Yeah, it really was, Jess, except for the exception of the May and the July corn contracts. Solid gains across the board in corn, soybeans, wheat, in particular in the new crop corn today up 4 and new crop beans up a nickel. Gave back some of their earlier gains, but again, some leftover or spillover support and strength from last week's acreage numbers, which were surprisingly smaller than the market was anticipating for both commodities. And so some good underlying support for the new crop. And today the bear spreaders, that is the guys selling the front months, buying the back months in corn, we're at it as that spread narrowed in a dime today between the 10.5 actually between the May, December, and I think it was 10 on the July, December.
Yeah, so interesting things to break down today. Let's start with the soybean sector. That's where we saw buying across the board and those old crop contracts taking the lead once again. And it just seems that with that smaller acreage estimate from Wednesday, we're starting to maybe get some price rationing here a little bit, it looks like, as we move into this week.
Maybe so. The Bulls have to be disappointed that after last week, with the stocks number basically unchanged, but the acreage number down, that we didn't put a little more emphasis on the new crop to really rocket it. So it was up limit, if you might remember, on Wednesday. Thursday gave back half of the limit, so or thereabouts, and then today percolated up a little bit. So it doesn't look really bullish. It doesn't look bearish. It just looks like it's been, and that has continued more and more sideways. So the market will focus its attention on southern hemisphere supplies as harvest continues to roll along. There seems to be actually about a little bit more, I'm going to say a little bit more of a, maybe a convergence of crop estimates out of Brazil at this time. However, everything, write it on a piece of paper and kind of tear it up, throw it to the wind, because Friday it starts all over again with another report, USDA supply and demand report this time.
Yeah, and that's going to be very interesting. And, we came in with these lower than expected acreage estimates, and stocks were pretty much unchanged. As we look ahead to Friday with those WASDE numbers, do you see anything there in the pre-report estimates that we maybe need to concern ourselves with, or something that the trade might be, pricing in or focusing on here this week?
Old crop corn is holding in that 550 area. And the export sales we had 2 weeks ago to China, and then last week's sales numbers, that puts us, we're at 99% of what the USDA thinks will be the case for the year. So it's a challenge not to be somewhat optimistic that we'll see some better or bigger export sales expectations in the report here in April. The thing I think the USDA has been somewhat hesitant on, and maybe I can agree with them, is that export inspections in corn, but we're really at a slow pace. They've really started to pick up lately. Today's number was 75 million bushels. I mean, just huge, big numbers there. And that brings the year-to-date now at 54%. That's clicking right on, because we needed to pick up. So it's getting like what I'd call on schedule. I got to think that there's a real strong potential for increased demand, mainly through exports and lower carryout for corn. I want to believe that in beans, because the sales have reached the USDA projections basically, and the export inspections at 88.8%. So I got to be a little friendly to both on the chance that we see a little more demand factored in.
One note on corn, I think we should talk about a little bit more before we continue on. I know with today, those old crop contracts were lower and we're kind of falling below that key resistance area of 560. But it seems like we kind of expected this with corn just because the stocks to use ratio isn't so tight there.
Right. And you could also expect this. So if you're a corn producer and you were kind of holding out here, all of a sudden prices softened up toward the beginning of last week, and we get a jump on the report. So I think there were enough farmers out there that kind of probably said, I don't want to get too greedy here. Probably. So I think we had some corn move into the pipeline, is my point.
Mhm,
And you got, and some of the bids have been attractive to try and get it into the pipeline or get it for a June delivery.
mhm.
Um, I think there is a temptation this year, and rightly so, for producers to hold back some of the gambling stocks. Even at high prices doesn't seem to make sense. Why would you holding it back? Because prices are high for a reason. So if you can exasperate that, get a little more push on weather or something. But yeah, 550. We look back, best prices in 7 years. Really interesting developments on the charts. Good looking markets. New highs established last week. Disappointing that we blew up and then lost some of it on Thursday, but hanging right in there. The Bulls have to be, ready for something supportive next or on Friday.
Well, and I have to think as well, you talk about some corn moving to the pipeline, and I mean, basis is so strong in the countryside. I know I've talked to some friends in Iowa and parts of Minnesota. I mean, that cash basis, I mean, they're selling 520 something, 525 something corn, at the elevator. It's hard to not take advantage of some of that profit at this point. And I had one farmer specifically tell me, he said, I'm trying not to be too greedy here. But, and that's how
Right.
that old adage goes, Brian.
Yeah, and it's when you have a bull market, I've always argued.
Mhm.
Excuse me. I've
Yep.
always argued that bull markets seem to be, from a perceptive, at least from my perception, they're the most stressful for farmers because, everything you sold prior to the market hitting new highs, seems or feels like a mistake. But that's the evolution of markets. Well, I think what most farmers want to be careful of is what's happened the last several years is that when the markets have said they're just done, and they're done in a hard, fast way,
Mhm.
and it's hard to get that back. So keep trickling sales out. I think it's going to probably take something, really friendly on the report Friday, or maybe the May report, or some weather, or both, to really sort of get the next big leg higher. And we saw that in soybeans too. We talked about the market being well supported, but May beans are at 14.12 in essence, 14.12 and three quarters. They've been at this level. They touched this same level back on January 12th. So you're talking January to February, February to March, now March to April, almost 3 months, and you could argue the same price.
Yeah, very, very true there. On the wheat side of the equation today, Brian, seemed like wheat just kind of followed along with the quarter soybean markets. I know we did get that export sale this morning of soft red winter wheat. Many people saying or thinking that was China. And then I saw KC wheat down a little bit today as well, just on better weather expectations. It sounded like, and better numbers in today's crop progress report. Is that kind of what you saw in the wheat market today?
It is. Unfortunately, the trend in wheat for right now is down. It did post on the day of the report a pretty massive bullish key reversal, which just means that it was really looking ugly at some point. Then got the report news and it blew up. Had a pretty firm close. Seemed to give some of that back on Thursday, as did some of the other markets, but hung right in there today. Yeah, we like that 100,000 plus sale, and anytime it's 100,000 in a day, you'll get that announcement that day. So really, impressive and important. I'm a little leery though to believe that on Friday we're going to see the world supply as well as U.S. supply and demand numbers really indicate any kind of a real shortfall of wheat. I
Mhm.
don't I don't think that's going to happen, and I think times are changing quickly. I want to believe quickly with the vaccinations and COVID, and the idea that countries may not have to hold wheat back as sort of a security blanket that may be getting behind the market.
Brian, let's shift our conversation over to livestock. The hog market seemed like it started off strong, following along with cattle today, and then sort of kind of fizzled out there towards the end of the day session. And I know we got a nice pork cutout value posted today. What did you make of what we saw on the hog charts today?
Well, if I'm a hog producer, I'm really paying attention to today's signal. We're at the top of the market, hit a new high today, Jesse, and then finished lower, but we took out the range from last Thursday. So we come back from a 3-day weekend and you post at the very top of the market a bearish key reversal. So that in and of itself doesn't mean prices have to go lower, but I have come over the years to rely on that signal at the top of the market, something to be watched carefully and respected. There's a lot of optimism that pork can continue to gain ground and that hogs can, maybe make another run up to 120. I think that's all in the we'll see category. Right now, today's signal has me encouraging producers to really think about getting some forward sales in place, some hedges, or some puts.
And looking over on the cattle side, I think a more interesting story shaping up there. We saw a really strong day today. We saw higher cash business late last week going into the holiday weekend. And I'm just hearing from a lot of folks that they're starting to think that maybe this spring price rally is starting to come around in this cattle market. Are you on that side of the equation as well, Brian?
I have to be. We're bringing the weights down. We brought them down all winter. They're getting lighter. We're
Hmm.
hitting this kind of loophole we talked about where cattle could be a little bit tight. But what's really interesting is you're seeing these deferred months really show some strength and some muscle, and maybe keep that idea of 135, 140 alive. You had a push over 128 on December today. Another new contract high there. Good solid close on the charts. Nice uptrend. Back in September, November, through the end of the year, we had this nice inverted head and shoulders formation. That all came into play with topside objectives. So hard not to be a little bit optimistic here. Weight gain has been good, so it's not like we're running into some rugged animals here.
Hmm.
This is a demand driven market, and perceptively it's more about exports. It's more about restaurants opening. It's more about just people buying more. And so far the market's been way ahead of the curve and still is.
Well, and I have to think our cattle producers out there in the countryside got to be happy that we're starting to see higher prices out there in feedlot country. That's something we traded that sideways range for so many weeks, Brian, and now we're finally starting to break out of that to the upside, and I think that has been very encouraging to see.
All of these egg commodities have been encouraging, whether it's cattle, hogs, cotton, even milk had its day, but all of them had really good hogs, new highs, really good runs, and really not showing big signals that they're done.
Mhm.
But we did, like I said, we saw something in hogs today and something we'll watch for in cattle. But right now, trend is up. Trend is your friend. Um, the buyers are getting more concerned, I think, on the bigger picture perspective. And there's just an optimism that demand is going to continue to grow as it's been sort of, for lack of better words, penned up on the sidelines for a year.
Very, very true. You mentioned milk there real quick. Any updates on our dairy market here today?
Volatile. We're starting to see the back months pick some ground up again. So new highs posted in August milk today, September milk. This is where the producer needs to start watching this pretty close. We're back up just under $19 on a lot of those deferred months. And we've seen time again, when you get over $19, you probably want to either have a trigger point under the market or start selling into that on a fourth of your milk. 19 to 20, 20 and a half, we sell another fourth if we're up there. Best to keep working at just pushing in lieu of some kind of strategic chart formation. Just set target points and let it get triggered up. I don't think we're in a mad rush to see any of the end users or producers that is liquidate right now. They certainly are sensing the higher price corn, but the milk market's telling them to continue to produce.
Brian, also looking at the stock market and the outside markets here today. Crude oil was down, I know, with some OPEC news, but I mean, Dow Jones, everything else, stocks looking strong today as well, Brian.
Yeah, there's an unbridled enthusiasm that you're going to see a lot of activity in the stock market from at least a perspective of corporations really starting to tout earnings and people back to work and profits. And so the stock market has been really adapt to that. But my caution is that a sign of a really strong or deep economy? I'm going to say deep economy probably because you had big tax cuts and things years ago, and those are still there, so they haven't gone away. But the perception is they're going to go away. But you also got a $2 trillion windfall with COVID, so there's dollars pumped in, and then another talk of another 2 billion into infrastructure building. So you're talking about a lot of money that has to go somewhere, and probably the investors looking at it, certainly not CDs or interest rates and market money or money markets or some kind of interest bearing account. It's in the market itself. That's where people are looking for better returns.
Well, a lot of things to consider, but again, a mostly positive day today throughout the market trade. Brian, I know of producers, they're getting ready for spring planting. They're going to be hitting the fields. They're going to be busy. If they need some advice with their marketing plan, especially during this busy time of year, they could reach out to you and the team at Total Farm Marketing for a little help, can't they?
Yeah, they sure can. And if they're in the tractor and want to chat with us, for 5 minutes when you're going up and down a field, just give us a call. Yeah, really important times right now, critical crossroads. And I suppose somebody like myself could say that at any time, but boy, this is a good pay raise. This is a good market right now. Strive for that balanced approach.
Definitely. You can find them online at totalfarmmarketing.com. That is their home on the web, and you can find their 800 number there as well by just going to totalfarmmarketing.com. It's 800-334-9779, and you can ask for our good friend, Bryan Doherty. Appreciate you joining us on a Monday, Brian. Thank you.
Always my pleasure. Thank you. And
Bryan Doherty. Yeah.
have a blessed week. You bet.
Bryan Doherty with Total Farm Marketing, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Monday, April 5th edition of the show. I'm Jesse Allen. Have a great afternoon.